Well, Wilfred, President Trump casting doubt over a phase two China trade deal. He was arriving in Miami and he spoke to reporters and said that he has many other things on his mind and that the relationship with China has been severely damaged. He went on to blame China for the spread of the coronavirus, saying that they could have stopped the plague. They did not stop it. And then they could have stopped it from going across China. And therefore, they deserve this blame. And he's saying that's one of the reasons that he is skeptical of a phase two trade deal going forward. Wilfred, as you know, there's even skepticism over the phase one trade deal even being completed. But again, this shows that the president having some tough words for China, even as he's being pressed by his Democratic rival, Joe Biden, over exactly how harsh he plans to be with the country. Back over to you.
Elon, thanks so much for that. I mean, as you said, I don't think we particularly expected phase two anytime soon. Josh Brown, you've been getting a little bit more constructive on Chinese stocks, which were down today 2%, but for the week as a whole up 7.3%. Very impressive run for Chinese stocks. Does trade headlines derail that thesis, or have they managed to pivot their economy to be more domestic focused now?
So, with all due respect to the president, there never was a trade deal. All of the reporting tells us there were like these sideline conversations about, come on, please buy more soybeans and things like that, which has nothing to do whatsoever with the U.S. economy or helping the issue. And it's not an accident that the Dow Jones made a record high in January of 2018, right as the trade war was beginning to heat up, and has never been able to appreciably get over that level. The trade deal has been a problem for a lot of the U.S. economy, and it's never improved. Before the pandemic, during the pandemic, probably not even in the aftermath of the pandemic, because there really hasn't been any substantive deal that's meant anything to the real companies that are doing this kind of cross-border buying and selling of industrial goods, agricultural goods, et cetera. It's non-existent. So put that aside for a second. It doesn't seem to be impacting China the same way it's impacting the U.S. economy. Chinese stocks made a 5-year high last week, followed through with incredible strength all of this week, and not just tech stocks in China, the CSI 30. Take a look at the Shanghai Composite. Take a look at the indices on the Shanghai Shenzhen. Take a look at the FXI, which is Chinese stocks that trade on the London exchange, mostly blue chip stocks. They are breaking out in concert, and that's happening at a time where U.S. investors are actually sellers. 7% of all the assets that U.S. investors currently have this year in Chinese equity ETFs walked out as Chinese stocks are outperforming. The emerging markets index from June 1st through yesterday is up 16%. The U.S. stock market's only up 3%. So all of these trade issues are a much bigger problem for U.S. companies than they are for the Chinese economy. And I think the stock market in that country is telling us that.